Why is it that Cinemark has done so much better than AMC from a stock performance perspective? Because I look at the long-term chart of Cinemark, and we really haven't went down at all. Like 2020, it's the same price it was. So I mean, that's not saying it's done great, but it hasn't been down in the last 6 years. And AMC, over the last 3 years is down like 99%. Is this all just because of dilution?
AMC Entertainment surging 11% today, Friday, July 11th, based on an upgrade from Webush's Alicia Reese, upgrading the company to Outperform with a $4 price target. We're going to break down what Alicia said in today's video. Let's get right into it. A little bit of foreshadowing 2 days ago on July 9th from Alicia Reese in an interview with Dennis and Joel over at PreMarket Prep. I'll put a link to their video in the video description down below if you guys want to check out the whole thing. 2 days ago on July 9th, Alicia Reese hinted on the PreMarket Prep show that she was reviewing AMC, and then today, July 11th, we get an upgraded report from Alicia Reese. But unless you're a Webush customer, you probably don't have access to the full details. So we're going to talk about the highlights from articles like this here on Benzinga, which I will also put a link in the video description. The headline reading, AMC stock just got an upgrade. Could premium screens, box office momentum signal a comeback? This upgrade from Alicia Reese particularly upsetting GameStop investors since just several days ago, she issued a sell rating on GameStop with a price target of $13.50. And guys, again, if you want to understand how analysts think, watch my GameStop video from just a couple days ago. This is a story about revenue, with GameStop having a revenue story going down and predicted to continue going down, and AMC and the entertainment industry having expectations that revenues are going to increase. And for the analysts, revenue makes a big difference. So if you're struggling to understand why analysts look at things the way they do, go watch the video. I'll put a link to it right here on your screen. Watch that video and learn a little bit more about how to analyze a company like an analyst would. It will improve your trading. It will reduce your frustration. In her upgrade today, Alicia Reese highlighting a couple of things which, if you follow the entertainment industry, you're probably already aware of. Ms. Reese noted that AMC will benefit from a steadier film release schedule in the coming quarters, which should support consistent box office performance. And we have heard that story from every CEO in the industry, that they're expecting things to get better from Q4 into 2026. I'm switching over to a Yahoo version of the article because Benzinga didn't want to let me read the whole thing without paying them a bunch of money to subscribe as a member. I'll put a link to this Yahoo article in the video description also. But Ms. Reese went on to say that with its premium screens, AMC is positioned to gain market share in 2025 and 2026 with the most premium screens in North America and expansion plans, which Adam Aaron and the team have talked about, in Europe and the UK. AMC and the management team have already communicated to investors and the world that the company has a plan to increase their premium large format, including both IMAX and Dolby format auditoriums. It looks like Alicia also has reviewed the updated debt settlement deal that was published on July 1st and 2nd, and she notes what we've talked about here, that the 2026 debt is now paid off. AMC's got almost 2 years now until 2027, when the next big batch of debt is due. And there is a substantial amount of debt coming due in 2027, but the company now has a window where they don't have to worry about crushing debt. They only got to worry about box office being big enough to support operations. Alicia saying here in her report today that AMC, having repaid or postponed all of its debt due next year, relieving near-term uncertainty, and is completing what it expects to be its last major share issuance for a while, the one that was announced last week, puts significant headwinds behind the company. That is good news. We don't want the headwinds in front of us. We want the tailwinds pushing us from behind. The big question that I still continue to see out there on social media, obviously, is all the dilution behind us? And that, I think, is a legitimate question. I can't tell you for sure. It's going to depend on how the box office does over the next several quarters, how many more additional non-performing locations AMC is able to close, what their CapEx spending looks like, and then obviously we look at net income and cash flow. But there is one other thing that we haven't talked about yet here on the channel, me and you, from the debt deal that was announced last week, the debt settlement. We talked about just about every other piece of it, and we mentioned that there was going to be a vote in December where shareholders get the opportunity to allow the company more shares or not. And if that vote passes, it says here in the document from last week that AMC agrees to not engage in an at-the-market offering for 6 months following the shareholder approval, other than at-the-market offerings for the lesser of 25 million shares or 50 million in net proceeds. There will be a moratorium on any ATM offerings exceeding $50 million. So you know what you're signing up for, and you know the time frame if you vote yes. And you know, I'm sure there'll be a lot of debate starting in October about the yes or no vote. We'll address that when we come to it. The Outperform rating and the $4 price target for AMC is a 12-month price target, recognizing that the box office is going to get better. AMC's revenue should grow over the next 12 months, and hopefully along with that, net income and earnings per share. Maybe we'll see some positive earnings per share for every quarter next year. We will have to wait and see. I haven't done my full detailed breakdown of all of the movie titles in 2026 yet. I just have the general guidance that the CEOs have given us. But if all of that transpires as expected, she is saying, hey, this stock could go up based on improved earnings and improved revenues over the next 12 months and limited ability of the company to dilute those shareholders anymore and dilute those earnings. And that really reiterates what I talked about in the GameStop video a couple of days ago. Growing revenue matters versus declining revenue, and expectations of growing earnings per share also matters. You got to have both. You got to have both. Let's close out this video allowing Ms. Reese to answer Dennis's question about why Cinemark has basically stayed flat since 2020 while AMC is down 99%. I think if you've been trading this stock, you probably already know the answer, although I still see people asking every day, why is AMC going down? Hint, it is because of dilution and the company's recurring losses. But is that story about to change in 2026? Stay tuned, my friends. Let's listen to what Alicia answered Dennis. And then if you have any questions, please leave them for me down below.
It's amazing to look at Cinemark, you know, not down at all, and AMC down 99%. Is that the dilution?
So the primary culprit for that, I would say, is that AMC, back when things were, going really well pre-pandemic, they had purchased several movie chains to become the largest movie chain in the world, and they did that on debt. So they had an immense amount of debt going into the pandemic, and that just put them in a very difficult position. Since then, they've had to dilute the share base significantly to just cover the interest expense, and they've done so many debt deals to get through that.